Will Trump's latest round of European tariff threats finally crash the stock market? In March last year, we saw a 20% fall, so is history about to repeat? We answer all that and more, plus show you how you can profit from Trump's latest threat with 8 ASX stocks as the brains trust behind Australia's leading government-accredited share trading education and market insight that is regularly called upon by major media outlets. We'll show you the professional stock markets playbook that actually works. I'm Philip Tortevsky, joined by senior analysts Janine Cox and Pedro Banales, and we are Wealth Within. Good evening.
Good evening.
Big news coming out. We're going to dive into all that. Trump.
Makes it more interesting.
It sure does. Pedro?
Yeah, good evening. Yeah, it looks like we're a bit desensitized to this news of tariffs, but we'll see what happens.
Yep, and more importantly, we're going to dive in and see how that affects the Australian stock market. So let's get straight to it now. What's the latest Europe tariff threat all about, and can it have a serious impact on our market? Because really that's what it's about. I mean, he's done this in the past. Last year the market fell 20% on the March tariff announcement. More so the question to you is right now, does it affect our market and global markets over the next couple of months?
The short answer or the long one?
I've got time.
You know me. Anyway, I'll give you the good one. In between all of that, if you think about it, the tariffs last year, like Phil said, hit us, and it was really quick, and it was on a global scale. This we're talking about is focused on Europe and actually positioning Europe to make the decision that Trump wants, which is about Greenland. So the challenge for markets is, how is it going to affect growth? That's really the big question, and what areas of the market are going to outperform? Because as we've said before, all of these things make a news, but they're not going to stop the market completely. We're in a bull market, and you know, until we go through that euphoric phase, a huge euphoric rise in Australia, we're unlikely to see the market correct anywhere significantly. It doesn't mean it won't pull back. Will it cause the market to pull back? Yes, it will. What we have to be thinking about, what are the areas where you could potentially make some gains, and that is defence, energy. This whole thing could cause technology stocks to eventually turn around and have another big boom, we can see. There are issues with trade with countries from the US operating out of Europe, and how could that affect the trade flows going back and forth between the US and around the world? That's a big question, but that's not going to happen overnight. These things are slower than what the media make out.
Yeah, and I guess the main theme overriding all this is that it is about energy, and that's what probably investors should really take a good closer look at.
Definitely.
Yeah, fantastic. All right, now is this a time to think about selling, or are we likely to see it end up potentially being another great buying opportunity? Obviously, you know, people say the market doesn't work like clockwork, or it does depending where you sit, but generally more often than not, 2 times a year we get a nice little correction. We saw it in April and again in December last year in 2025. Will this be the one to give us that correction? Or, you know, unlike what Janine was mentioning, are you thinking this could be something a lot worse?
Well, like I mentioned at the beginning, I think that the market has been somewhat desensitized to this whole tariff thing. If this news would have come out early last year, probably would have caused a bigger correction than and a reaction than what it has caused now. So I think this is more of an opportunity rather than, you know, a cause for concern. And I think one other sector that, you know, we haven't mentioned is healthcare. I think Australian healthcare sector is going to be a big beneficiary from this, because we do have a lot of companies in Europe which export to America. So if they're hit with tariffs, Australia is going to be looking very nice.
Yeah, and I mean, let's be clear that nothing has been set yet. It's a threat that if Trump isn't allowed to buy Greenland, if Denmark says no, then there will be tariffs. I think starting February 1st, there'll be 10%, and then by June, there'll be 25%, which is kind of what he did with China, and then pulled it all back, and we saw what happened there.
Exactly.
So
I think the 10% one's probably going to happen. You know, it's part of
that's stuck
his
around
plan anyway. Yeah.
All right, fantastic. Let's now get to the good stuff, and that is look at some stocks worth watching amidst this global uncertainty. This is what everyone wants to know, Janine. Some profit-making stuff here.
All right, let's get into it now. You can see on your screen there, this is Mesoblast, MSB. Some serious resistance at this level here, but this could be a real major opportunity. And I know that this stock is a favourite amongst traders. And we can see here that if we're looking at this level and the market pushes it higher, then it's got a long way to go to get to that all-time high. So this is where you've got to be looking at not just important levels, but the potential. So sometimes you'll look at a stock and you'll think, well, it's trading at lows, it could go to its all-time high. Not necessarily. When a stock's already proven and it's developed a trend like this one, it's more likely to continue to run on. But at the moment, it's pulling back to give you plenty of time to do your analysis and apply everything that you know. And as Gan said, use all you know all the time. And that's what we teach when we package it all together for you so that you can get the big picture on any stock. But I think obviously it's hit a really important level, but there's still plenty of upside on this one.
Yeah, it's interesting because you've got all these different stocks, especially in the healthcare sector. When you think healthcare, the biggest story of the year was CSL, which we're going to get into. And by the way, there are a few stocks coming in that second half, which to me are going to be even better than the ones you're about to see. So stay tuned for that. I think there's even a really good viewer question about a stock I really like. But anyway, I shouldn't talk anymore, giving too much away. But going back to CSL, obviously hammered. Sonic Healthcare got hammered. But you look at something like Mesoblast and some of the others, they're looking a little different. So are you looking into that as well when you're looking sector-wide and saying, well, hang on a second, why is Mesoblast outperforming? Or maybe it doesn't matter, but it is. And
yeah. I mean, if people look at the healthcare sector and see how far it's down and they're saying, oh, healthcare's no good, or they're going on yesterday's news, not looking forward. You've got to be forward thinking. So healthcare, as Pedro said, is a really good area, but there are some really good opportunities amongst the weeds, if you like, and eventually CSL will turn around and do what it's going to do as well. So still, I wouldn't take your eyes off that altogether. Yeah, and on that point, if you do want to know how to construct your portfolio, this is a great introduction. It's how to beat the managed funds by 20%. It's free, you just have to pay the shipping. It's from Dale Gillum. The link is in the comment section below. We have plenty of it in stock now, unlike last year, so please go and get your copy. It'll give you a great introduction to setting yourself up as a professional trader. But if you do want to take things to the next level, as always, go and check out the website, wealthwithin.com.au, and look at our trading courses, and go and check the testimonials out because they will blow your mind right now, what is happening with our students. But anyway, let's get to the next stock.
All right, next up we've got CSL, so talk of the devil over here. Now this stock, obviously it doesn't need much introduction. It's one of the top 20 on our market, huge market cap, you know, we're talking billions here. And what I really like about it, is that it's found support at this very key level, roughly around that 170 to 175. Now, to the people in the know, there's multiple reasons why this level is important. Obviously, you know, I can't get into it right now. It's too much to pack it in. If I was to apply all the analysis that we know, it would probably blow people's minds. But basically, this level right here is very strong. It's currently finding some support around here. It's trading sideways. It's not out of the woods yet. You know, it could basically turn down from this level. I'm not really seeing any real confidence that it's you know, about to turn, but I'm seeing early signs that are looking good. In particular, the fact that it found resistance at this low of 168 back in October, and then once again it found support there in January this year. So, you know, that in itself, it's a good sign. Yeah,
can I just get your thoughts on this one as well? Because we're talking about a big stock, and, you know, last week we had a viewer call in and say, I think CSL's looked at the bottom, and we said, look, it is a good stock, but potentially, do you need to see more than that to be calling a bottom, just so we can, you know, keep going from that conversation? Or are you thinking like Pedro? Because obviously different traders, different mindsets, some more aggressive, some less. CSL?
CSL, I think, as we said in that previous show that you highlighted, it needs a bit more time. It needs to have that decent bounce off that bottom. But CSL, what it's done before in the past, could catch you by surprise. So you just have to have a confluence of analysis on your chart, and the probability of it producing a profit depends on whether the weight of evidence suggests that or not. So it's not a matter of saying CSL's down, it could be a good opportunity. Like Pedro said, it's hit a really important level, and this could be the one that it really has a strong rebound from. But then, you know, you're risking your money when the overall trend is still pushing lower based on the recent price action.
Yeah, and just quickly, how important is why? Because I've been hearing this a lot over the last couple of weeks, you know, speaking with some students, the question comes, why do you buy this, or why do you look at this stock? I want to get both your thoughts on that, because oftentimes the why, for me anyway, it can be 3 or 4 layers back in looking for stuff, and can oftentimes hurt an investor or a trader, because we saw during the GFC in 2008, before 2008, no major economists came out and told us why it was about to happen. But every one of those major economists post the GFC were experts in why it did happen. Yeah. So in hindsight, why, but how important is it when you're looking for opportunities? Because might not get the why for CSL and still get a great opportunity by knowing what you guys know.
Yeah, if you're talking about headlines, then the headlines are always going to tell you a story, and it doesn't matter. And eventually they'll be right. That's the point, isn't it? But it's more about the timing of when the risk is okay for you to buy it. And even if it does bounce off that bottom and you don't get the first trade, if that is the turning point, there'll always be other opportunities to get into it, because there is plenty of upside. If CSL does take off from here, so the first level's 30%, and then you've got this level at 75. So there's huge opportunity in CSL if it does make that turnaround story. So the why doesn't really matter. It's all about the risk and what you're prepared to take. Some people want to be more aggressive and get in there earlier at that point. Others want more confirmation that the bottom's in. It's as simple as that.
Yeah, well said.
I think the why is going to differ between traders, and really that's the beauty of trading, because to one trader, the why will be different to the other. What we do is we give you the tools to determine what is that why. And really you need to go through the history of the stock and your trading style as well that will determine the why. So there's many factors that really determine that. That's my take on that.
Cool. All right, next stock.
Okay, the next one is a stock that I actually really like, but at the moment it's down. So it was interesting to see A2 milk finally move down as we thought would occur.
Well, it came out with the, yesterday they announced China that they were having lower birth rates, and the market didn't like it at all with A2 milk, but it is being picked up, so it might be one of those flash in the...
Yeah, one of those
flash shocks.
Exactly, yeah. But I mean, it's interesting that the rules for this stock had actually already triggered. So I think that the market news was a bit late on that one, and that's another powerful thing about the analysis that could protect you. And looking at its upside, it just makes it even more clear about where to get into it. I still think that short-term moves like this, it still signals that there's still plenty of upside in there, 35 to 70% potentially when this thing gets going again. I would change my view though if it takes out this low in July. So it's got to hold above that for me to still have that more medium-term bullish view on it. Yeah,
fantastic. All right, do you want to say anything on that one?
Just that gap is worrying me a little bit there, and we've mentioned that before. It does look like it's possibly on the way down, but I agree. If it takes out that low, it's probably going to fill that gap. If it does take out that high of $9.50 roughly, then it's going to continue that pattern and it's going to provide a nice entry there.
Great. Next one.
All right, next one we've got GrainCorp. Now, this is an Aussie, grain producer. It's in the name. It's an exporter, net exporter, and it's really been trading around that range. What I find interesting is that it's now at the bottom of that range. Now, that doesn't automatically mean that you're going to buy. Much like CSL, we want to find that confirmation, but it's nice to just square it off, because by squaring this off, you can kind of just focus on this area. A lot of people look at a chart in overall, and I'll expand this out so you don't need your glasses, and you might get a little bit overwhelmed, especially if you're new to the market. Now, by just squaring this part off, you can just focus on this area here and just see that, as far back as 2023, it's found support at that level. What's that level there? About $6.70 multiple times. It's a very key level, and it's just recently bounced off it. Now, it's struggling to get above. But at the same time, if you find a nice little, short-term entry rule, and this goes back to that why question, the short-term traders are going to have a different why as to enter this than a long or short-term trader. So if you do find that short-term and you know what you're doing, you could make some nice profit off this one. And then if you did want to hold it a little bit more long-term, you might want to wait until it breaks above that $9. But you could already be in it before that happens as well. That's the beauty of it. So I think that this one could be a beneficiary of this whole tariff thing. I know Australia, we're just on 10% flat out. Yep. They haven't increased it. He hasn't targeted us yet. He doesn't want to take over us, on the short term, although he wants to take Alba, he can take him if he wants. But for the most part, we're safe from the tariff. So this one could be a nice beneficiary and nice little short, medium or long-term trade.
There you go. All right, Janine.
I have a bit of a different view. And the main one, if we stick to the charts now, is that I guess from my point of view, I look at this and it's telling me that something's not right, this big sell-off here. And I guess I would want to look at the news and find out, well, what happened? Why did it do that? And is there a risk that it could fall further? And Pedro's right. It could just be an over selling of some news, and it could just turn around and go back up to around about the same level it was. But, for me, I'm not interested in trying to get that little bit there. It depends whether you're an income play or whether you're looking for growth as to how you would treat this. But by waiting for it to get above there are risks in that as well. Obviously, that's what Pedro's probably looking at, that, it's more a defined level and therefore it could just bounce around in this range for a while, which stocks can often do. But in waiting for it to get above here, we could be on a whole new wave. And, if you've studied with us, you'll get to understand what happens with the cycles of the market and how stocks unfold. And it's exhibited a really interesting pattern from this decline from May 2022 all the way down into this low that could actually cement what Pedro's saying, and it could be that the market's overreacted and it's about to move up and challenge this level again. But for me, I'd probably watch this for a bit longer. Yeah,
you're right. And really, when you look at that price analysis, always the most recent price action gives you the more up-to-date story of what's happening. And I agree with what you're saying. Looking at that big move that just happened down, that hasn't happened before on GrainCorp, all throughout that silent period. So you can't just disregard that and go, well, there's a clear sign the market's telling you sellers were active there.
Yep.
Know that.
Yeah, but I think with short-term traders, as you know, being a short-term trader, sometimes they're looking at ranges. So they're trying to range trade between lows and highs, as you know. And so this could sort of define, if it bounces and starts rising towards that $8 level, it could go all the way to that point. But it's got to jump across lots of hurdles. There could be trend lines there. There could be a whole confluence of analysis before. But for me, it just sort of makes it a bit messier to try to do that because I'm not focused on that short-term time frame.
No, good advice from both of you. Well done. All right, let's move on now. That wraps up our first round, but we've got more amazing stocks coming shortly. Now time for our trending topic this week. Janine.
When our major banks announce that term deposit rates will rise, we need to take notice. What does it tell us about our market and the current cycle? And is the RBA really done with hiking rates? Well, our banks have kicked off the new year, haven't they? CBA and NAB have lifted term deposit rates ahead of the RBA's decision in February. We know Trump's global tariffs delayed the bull market. Commodity stocks are booming again. Demand for commodities is high. Prices are rising. We see this in every market cycle. But it's a double-edged sword. Higher demand leads to higher inflation, which bumps up borrowing costs. Currently, inflation is above the top end of the target range between 2 and 3%. Spending has not helped. Black Friday sales hit another record, around 4% up on last year. Now, more spending, natural disasters, fires wiping out plantations. We saw the bushfires in Victoria that wiped out 10,000 hectares of plantation timber. What's that going to do down the track? A higher cost of materials is what, and higher inflation. So the bottom line, a few rate rises in 2026 are currently a certainty in my book. What does this mean for our market? Well, let's take a look.
Oh, yeah, it's very interesting, isn't it, right now?
The chart is poised, isn't it? Now, we're all thinking boom, we're in a boom, and that's what we've been saying for a while. Trump actually slowed it down and wiped out that good gain. Now, buy and hold investors would be rubbing their hands together thinking that this run's never going to end, but that's not the case. We know that eventually booms stop, but we still see there's some upside this year for our market. Could go to 11,000 points by the end of the year, could even eclipse that. Into 2027. So it's not all roses and plain sailing though. If our market took out this low here on the Friday, that was the week ending Friday, the 19th of December 2025, then we would be in for a bit more of a pullback. And we thought that could happen. So let's just take a look at how far did our market fall and what could it mean if we see a rate rise in Feb. 8% down, that's a normal market pullback. And I'm really pleased to see that happen because
really bullish.
Yeah, because we haven't seen that. We started to see those sort of pullbacks through here. That was telling us that the bull market had started until this, basically boulder was thrown in the pond and all the water got blown out of the, poor fish. And look, we're looking at 8% down currently, and if the market keeps trundling up and following that angle, I'm pretty confident about that 11,000.
Yeah.
Like I said, the only concern would be if our market does dive down and take out this low, but we're a commodity country, and in a commodity boom, that's pretty important.
Yes.
We know that the US market was leading with the tech boom. We still see tech opportunities coming up, and look at the tech stocks, how much they've corrected in the Australian market. It's massive.
Yeah, about 40%.
Huge opportunities there. Healthcare, like Pedro was talking about before, significantly down. So there's still amazing opportunities in our market here going forward. I'm still pretty optimistic about 2026.
Yeah, good points there. All right, if you want the skills to analyse stocks just like you've seen tonight, visit our website wealthwithin.com.au. But now let's get back to our topic and get into some more stocks. Pedro, what have you got, mate?
Got a beauty for you guys on this one. So this one is IGO Limited. Now, this one's one that we've had a look at in the past, and we actually quite liked it. And as I remember, we did have a level over here where we said that if it passed this level, which was around that $6, then it was looking nice. And it's done that nicely. And this is what happens. So just going back, when you're thinking that before, you could have either, somehow found a trade, depending on your back testing around this area, but it did provide another opportunity as that pullback happened, and then it's taken off. So from that high there, it's actually traveled up around that 50%. So that is quite a nice little trade. So if you're paying attention to stocks when they're at these bottoms, don't disregard them, because this is exactly what they can do. Eventually, they do turn around. This one's one in the lithium space, nickel, copper. They're well diversified. It's basically a miner. They're in gold as well. So they've done well from the commodity boom, like Janine said. But there's also a very interesting pattern, a basing pattern that formed around here. That if you know how to identify it, that would have added extra confluence to your decision. Yeah,
I mean, and speaking of the commodity boom, we've got a stock coming up next in our viewer questions, which is in the coal space, which I know everyone's been talking about now a lot, but that story's been running for a few months, so it's one of the big ones. It's going to be interesting to see how that space definitely unfolds. Next stock. All
right, let's have a look at Cochlear. Now, this is a very much unloved stock for a while, and what Isaac Newton said, what goes up must come down, and we've seen that in dramatic fashion with Cochlear all the way back to these prior levels. So it's basically wiped out all of those gains, and it's really interesting, isn't it? This is where often a lot of people turn around and say, I need more knowledge, because they could ride it all the way up and then they ride it all the way down, and what for? There were plenty of signals and rules and things to get out of Cochlear, and at the moment it's looking a bit more like it's finding support potentially here. It may do, but it's got to prove a lot to justify putting some money into it, in my book, because if you look at all of these pullbacks, there were not so many red bars. It was sort of trying to stop and slow down, and you could see it trying to close high on the bars. Here we've had much more committed selling to this downside after a strong rise. All of a sudden the market turned around and sold it off dramatically. So that sort of makes you question, and it did a similar sort of thing here before it found support and moved up again. So that's why I'm just thinking, okay, I'm not ruling it out completely, but it needs to jump a few hurdles and tick a lot of boxes before I like it.
What do you think of that 240 level?
In terms of the downside?
Yeah, in terms of support.
Look, it's a very strong level, but prices can always come back into previous consolidations, and how far's, how long's a piece of string? Because it could come back to 220. That's a risk for Cochlear at the moment. If it holds and it doesn't take out this low, turns around and starts moving up, could be a nice one to take out an new all-time high this year. Yeah,
interesting. Now let me get your thoughts on that 240 level, because I saw you smile. Yeah. And there's a reason probably why you asked it.
Yeah.
Why are you thinking 240? Why is it important to you?
Well, that's the thing. You know, when you look at charts all day, you start to realise things, and it's like a tradie when they look at a painting and it's a little bit.
Tradies looking at paintings?
I don't know. I think they do that. Well, I don't know. These days they're very busy, so I don't think they've got the chance to look at paintings. But you know, you can just look at something and know that it's off. You know, a few millimeters or whatever. When you have the skills to look at a chart, you can just see these levels, and that 140 level, you can just see that the stock has found, you know, resistance multiple times and, you know, support more recently as well. So more around that $250 level really, but. That's not the only reason. Obviously, you know, applying different ranges and different things, you know, different strategies that we teach will get you, you know, certain levels that it could find support at. But also we've got that nice little trend that's supporting the up move there. So that's why I kind of pinpointed that level there as something of interest. You know, at least we should take note of that level and see whether there's a possible reversal going on.
Yeah, I agree. I think it's a really key level. Like, it'll be the first time the stock's really saying to the market, we're going to accept new highs.
Yes.
But let's move on to the next stock.
All right, next one is CCL. It's called, you'll have to say that one for me, Pedro.
I think it's Costco.
Costco, CCL.
Yep.
Now, is that all the data on the chart? Because it looks a
Now,
bit...
it looks a bit odd, doesn't it?
Yeah.
So I just give it a bit of a freshen up. It looks like it's gapped down significantly, but here we go. It's updated now. So we've got some short-term information on this stock. It's actually found a bottom in 2025 with the Trump tariffs reversed, and it's just making higher lows as it continues to run up. I think at the moment, one, there's not enough data here. Two, it's looking a bit extended right now. But if the market turns around and goes up, you know, this thing could go above $5. I can see there as
it's
a
healthcare
possibility.
stock, by the way.
Okay. Yeah.
Yep.
So, you know, it's running on news, isn't it? Probably more than likely.
It does, and it's one of the, you know, ones that actually went up after an IPO. You don't get that very often, right? So it does signal here on the monthly chart that it could, you know, have a bit of a reversal soon, possibly to $3.60.
Interesting. All right, next stock.
Next one.
That's Atlas Alteria, so ALX. Now this one is another one that has had a significant fall from this top here. We can see that it's found resistance at that high of $8.50, and then once again it retested that level. So that seems to be an important level for this stock. And you know, if you're well versed in technical analysis, then you'll realize that is you know, a very interesting pattern that it has unfolded there. So really the line in the sand is around that $4.60. I think it's, you know, skimming along there, but if it does break below it, then obviously it's more, you know, it's game over basically, and I think that it's going to go to new lows there. So I would say that the next level is around there. That obviously that's not going to be, you know, set in stone. But, you know, just from an overall look, it does look like it's trading that way. So what you could do is you just, you know, ride the momentum on the way down and just see, you know, what happens when it hits around that area. Is it going to break through there first, or is it going to break momentum? Which one is it going to do first?
Interesting, Janine.
Yeah, I think that I disagree with you on one little aspect.
Yep.
I can see a lot about what you're saying, and it's correct. However, I'm just wondering whether, in the case of AZJ, whether it's actually hit a more important level. Now, what you're hiding from everybody is what we know when we apply all of our analysis to the chart as to the strongest levels on any stock. You're obviously not telling them that. So that's why
I have to be careful with my words.
That's why you've marked the level where you have. But often there can be a range, can't there? I mean, it might not just be one line, and people sort of try to draw support and resistance when they watch us talk about it.
Yeah.
They have no idea how to work out where the strongest levels are, and sometimes it might not just be one line across the chart.
Yeah, it's about putting multiple confluences together, and we've spoken about this plenty of times. Just because what you're seeing may look simple and easy, there is a lot that goes between the ears, and we're trying to make it as simple as possible so that we can put some context around it, maybe give some value, and then hopefully extend that into getting some learning.
Well, I was speaking to someone the other day, and they said to me that they worked out some rules to trade a stock, and then they worked out their price analysis. And if they hadn't have done the price analysis, then they just did the back testing in isolation and followed the rules like that, they wouldn't have realised that the stock was about to reverse on a really important level. So it's about having all of that, and that's why we teach price, pattern and time to give you everything in one go.
Yeah, if all you can do is answer the question on the stock market, where's the stock likely to go to next, and what is my risk-reward opportunity in that moment, then you've pretty much answered all the questions you need to answer. Then you let the market do its thing.
Yeah, because it's not just enough to buy the stock. You need to know if the rise is going to justify
worth your money, worth your time. Yeah. Yep, all good points. All right, moving on. Actually, before we move on, let's get your favourites.
All right.
Only one.
Yep, only one. All right, so I'm going to have to go with IGO on this one. I really like the breakout of that bottoming pattern there, and I think it's on the rise. Great upside, possible up to that $17.
Cool. Janine?
Good choice. I think it's coming back in the short term though.
Yep.
And I'm waiting more medium term for Mesoblast, just to see whether Mesoblast has the strength to get back through this level. It's a little bit higher risk, and you might think, oh, that's unlike you, but it looks really good, that really well-defined level.
I would not have picked that.
I like this. Normally everyone agrees on this show, but this is good. More of this in 26. But moving on shortly, we're going to get into our hot stock tip, which has massive news coming out today. But first, let's answer your questions. Nathan writes, wanted to ask your opinions on Whitehaven Coal. I bought in at $5.50 and I think coal is not going anywhere anytime soon. Can the stock break through to the all-time high on this run, Pedro? Whitehaven Coal, we were speaking about this stock many months ago, saying this looks very, very good.
Yeah.
It's taken off.
It has. $5.50. Nice entry, Daniel. Good stuff. Now, interesting that he says that coal isn't going away anytime soon. I just saw the news this morning that the coal-powered plant that's owned by Origin in New South Wales has been extended by another 2 years. It was going to be shut down in 2027. They've now extended it to 2029 because, big surprise, renewables can't keep up with the demand. I'm all for renewables, but it's not going to happen anytime soon.
Well, even last year, or maybe might have even been the year before, Warren Buffett did a big play back in fossil fuels. I remember we were speaking about it, saying, well, the guy's not a fool. He's obviously seeing something there that maybe, as the story suggests, the demand isn't able to catch up in terms of the infrastructure, and now we're seeing this come through. It's an interesting development.
It is. And I mean, on top of that, the stock is looking nice, but sorry, Janine.
I think that these companies are always at risk with the global situation and the conflicts because of the wars. So more and more countries are moving, unless it's in their financial interest to pull it out of the ground, or if they have it on their own shore. They're not going to be buying it off countries that they don't want to do deals with or don't want to trade with. So therefore, I think that is a really big risk when it comes to energy, and that's why there's this race that's going on to secure supply. But I still think that while this run is going on, I still think that coal is still at risk to the downside. China itself said that it was making great inroads to become cleaner.
Well, they're going nuclear.
That's right. So where is that going to leave coal?
India.
But India will make moves to do the same thing, no doubt.
Yeah, they're talking about bringing industry back and so on, but they do say that the demand is coming from India. But we'll soon find out. The chart will tell all.
Well, the beautiful, and that's the beautiful thing, having this conversation, trying to answer the why, but then looking at price action and going, well, buyers are clearly dominating Whitehaven Coal right now, so where's your opportunity?
That's it.
I just look at the underlying, the coal price, and let that tell you.
Can it break the all-time high on this run?
It's going to find some short-term resistance, and that's exactly what's happening. And I understand why maybe Daniel would be, writing in, possibly a little bit worried about this level right here, around that $9. If you're not already in it, it's probably a little bit high risk to get into it now. Really, you should have gotten in around that time, around that $5.50, depending on which rules. I think short-term resistance. Can it break the all-time high? Look, even though the demand is there, I do somewhat agree with Janine that there is a risk to the downside because energy is just evolving. Every day there's something new coming out. There's new policies coming out. Obviously, the policies over here are more towards the renewables, whereas policies in US are more towards fossil fuels. So really, it's a tug and pull type of scenario. I think short-term risk. I'm probably neutral on this one. You know, it's hard to tell whether it's going to break that all-time high.
Yeah, and that was Nathan, by the way. Daniel's.
Sorry, I keep saying Daniel.
Got the names crossed.
Cheers, Nathan.
Anyway, Daniel is moving. Email is next. Now, Phil spoke about CXO over a month ago as a hot stock tip, and it has risen almost 150% since then. There you go. Who's Phil? So do you see this as an opportunity to still capitalise after a significant run? Janine?
I don't know, Pedro. Shall I pump him up?
Nah.
Why not? A little bit of a pump.
It's the 50th one. It's all right.
You made everyone rich.
Nah.
All right.
CXO, has it got more to go?
Okay. All right. Now, just looking at it, the answer is yes. In the short term, pullback, right? We're seeing a pullback, and that could hurt because even though the chart's showing some big moves, the downside could be could wipe you out of a trade. So at the moment, it's come back nearly 30%. Could it come back to 37.50? Sure, 37. That's about 20 cents. If it does, even better. If you're not in it and you're thinking that this is the sort of stock that you might like to look at, because you know, there's the angle of the previous trend that it was in. Now it's on an accelerated trend, and you need to really learn about trends and how they change and what things to look out for. This is a critical part of making money over the next couple of years. In 2026, we're looking for good trending stocks, and this could turn into one of those. It's on the small side, obviously, at the moment, but if it gets back through that high, yep, it could go all the way up to fill that gap and head towards $1.
Yeah, I mean, how powerful is it what you just said then? Because most people will look at a stock that's running up and will say, no, I just want it to keep going up. But what you said is so important when you know how trends break down, how they form, saying that, hey, I want to see sellers come in here. To me, that gives me more confidence that this thing's got legs. And I don't want to dive into it too much, but they are these specific things we do teach, telling you what is going to consistently give you that next leg up and that next opportunity, because that's what it's all about. As you know, just buying alone, whilst most people think it's amazing, it's not unless you're in the stock.
That's right.
And it's giving you all these other real important warning signs, which go and do the course and you'll get a bit more insight on it. But very, very important point. Let's move on to the next email now. Renee is next and writes, I purchased CGS on the 6th of February 25 for $1.18. I purchased it with a medium to long-term view. I would like to hear your thoughts on the stock, and do you think it's building a base here to move higher? All right, Pedro.
Another nice entry. I mean, I'm glad to see that people are taking these, nicely. So cool. I can see possibly why you took an entry around there, and I think it was well executed if you followed your rules. Now, I'll just emphasize that I hope that you did follow a good set of rules, because you want to be able to replicate this. You've done well. You know, I'll pat you on the back for that. But you want to be able to replicate these types of moves. That's what's going to make you a consistently profitable trader, basically. It's at this level of that angle of rise that, you know, it's basically gone parabolic from that. It could come back possibly to that level now, and I can understand why you're writing in and possibly thinking that, it's actually come back quite a bit. And that, you know, stocks usually do that. Once they hit that old new time high, they do come back a bit. This one's come back around that 30%, which is usually enough to see a nice considerable reversal. If it doesn't reverse from here, then that's quite bearish for this one. Now, this one's Cogsgate. I actually haven't seen this stock before. This looks like a fairly kind of a lower liquidity type stock, lower market cap. It broke that angle of that momentum there. So the momentum has definitely changed. I'd be looking out for that $1.80 level for some possible support. But depending on the rules, when you would have bought, that's great. You've got your entry rules, but you also need to define your exit rules. That's what's going to determine whether you get out here or not. Exactly, yeah. Whether you make money, because you would have already had your back testing done and had a look at these previous runs. Check out what it does back here. What it did back here and what it did back here, and is that similar to what it's doing now? Because really that's going to be your best determinant as to whether you exit or you go along for the ride.
Good point. All right, Matt's email is next, and he writes, I've only been investing for about 12 months. But in that time, 4 of the ETFs I have invested in have risen significantly. ARMA, Gold, GUS, and Semi. Seems like a bit of a tech play there and defence. And now I kind of feel like I'm holding a live grenade. You mentioned knowing when to get out in the last week's episode, but how do you know when to get out of an ETF that is up 40% or more? I feel like I can't do anything without just being annihilated by capital gains tax, but I also don't want to wait so long any profit evaporates. The 4 ETFs make up over 50% of the portfolio. Is this a time bomb, and what do I do? Now, we don't have the charts on there. I think this is more of a question around, let's address the more important points in terms of he's concerned. He's up quite a bit. The weighting of these 4 ETFs make up half his portfolio, so he's concerned about that. And because they're up so much, and he's watched the show and we've said selling is the most important thing, which it is. If you can't sell right, you're not going to keep anything. He's in this situation now. So aside from looking at the charts, how does he fix this?
I would say simply write an email to info@wealthwithin.com.au. So I need to talk to one of your education consultants about how do I get some knowledge quickly so that I can manage my downside risk, because I have no idea how to do it. That's the issue here.
But I mean, how often do you see this story?
Every day.
Yeah.
Yeah, unfortunately. And people buy because it's really easy to buy. It's just the same old. It's like that repeating record of things that people do. But I think congratulations to you for having a go. Congratulations to you for picking some things that you were comfortable picking. Maybe you had some good rules to get in at the time, I don't know. But clearly that selling side, he needs more understanding, and it's just having some rules, deciding, what makes sense. And just to say I'm going to sell when it falls a certain percentage, that's not...
It's not consistent.
A consistent way to do it. And it could just pull back. We can see a level that's there and off that ETF goes again.
Yeah. And how much does that destroy someone's, psychology as a trader? Because you do make those moves and you say, okay, I'm up 40, 50%, 60%, I sell. Or it's falling and I decide to sell. And they're those moments where, no, you should have stayed in that trade, because those 3 or 4 trades are going to give you the best return for the year. They're the ones you shouldn't have cut.
Yeah. And it depends what the ETF is too, as to how you're going to handle it. I mean, is it a really well-diversified ETF that's not weighted to just a few stocks? Is it the big tech stocks, for example, that are dominating that, so 5 or 6 stocks? And is there a better chart that you can look at that gives you more information to do the analysis on rather than the ETF? People try to start looking at charts and they're looking at ETFs, which may not have much history, but there's always stocks and markets behind that would have a broader history once you've got some analysis to apply to it.
Yeah.
But I mean, he could write into the show and ask us about some of those ETFs. I mean, from time to time we do talk about them, don't we?
We sure do. Did you want to add anything here in terms of maybe some advice you could give?
Look, one little advice, we always talk about the technicals, and the thing with ETFs is that you can't check the fundamentals really on an ETF. If you're trading a company, you can look under the hood and see whether they're profitable, whether it looks undervalued, the dividend yield, and so on. With ETFs, you're going mainly on the chart. So unless you're well versed on the chart, I actually see it as a lot harder for new traders. I see it on the news all the time. They make it out as ETF, the new passive investment. Everybody's getting into it, but you really need to be well versed in technical analysis. So I would say that go to a different time frame, but you need to know what you're looking at. And if you wanted to, look at actual stocks rather than ETFs, because there's going to be a lot more information that you can ascertain as to whether you hold on to it or whether you invest in it in the first place. Yeah,
I think right now the best thing to do is go and have a good hard look, and maybe even get this book, start off with this book and see some of the techniques, because there are a few techniques in this book that will give you a nice little introduction at least to start thinking about selling, because you've uncovered one of the most important things on the market right now and where probably your game needs to advance. So thank you very much for being honest and emailing in, and hopefully you do as Janine said, give the office a ring and they'll be more than happy to have a chat to you and help you out. But anyway, Anna's email is next. I was hoping to get your thoughts on FRS, as I currently hold the stock. The company has recently announced a share purchase plan under which new shares are being offered at 17.5 cents per share. Shareholders who participate will also receive options exercisable at 24 cents with an expiry date 3 years from the date of issue, on the basis of 1 option for every 1-to-1 shares applied for the issued under the share purchase plan. Now, I went and had a quick look at this, and I'm looking at the share price and I'm looking at the offer, and it's way off. So I don't know whether she's picked the wrong code, because it's very rare for me to see an offer that is, so
It depends on the timing of it. Is it current? Like, is the offer now?
Yeah, now.
That you can pay that? Yeah.
17
Normally,
cents.
I agree with you. Normally what happens is the stock price drops to around, depending on the amount that they're offering. So, like, you've got to look at the
one
value.
for one.
Yeah, well, it's significant. So I haven't seen that happen either before.
Yeah. So I don't know whether it's the code, like the company's been mixed up in what she's emailed, but if it were that scenario, maybe let's just look at the stock price and talk a little bit about when is it good to take an offer?
Well, first of all, should you go into a share purchase plan in the first place? I guess, if it's going to dilute your shares, which they will, and it's new stock being offered because they're raising capital, then to me, if you're in it and it's running and it looks like it's got long-term potential, I don't see any issue, and you're in profit with taking up that offer because it will dilute your shares. But if you don't, so from that point of view, I like it. Do I like the stock technically to be wanting to do that? And I guess the answer is it looks great. I mean, it looks fantastic. It's gone to challenge the all-time high. There's a gap here. With these stocks, sometimes they don't fill. There's a gap down here. There's one there, and it could take years to fill the gaps. It could come back, but you just don't know with these smaller stocks whether they're actually going to fill those gaps. So this is really a decision of a risk, in my view, a risk decision. So, you're looking at it, how much would it cost you to do that? If it's one for one, then what does that mean to your profit in terms of, if you're buying it at 17 cents and you've paid whatever, and if the stock, it's all right while the stock's
It's
up there.
50 cents,
you're getting a freebie.
Yeah, that's the point,
It doesn't work that way.
No.
Once the offer comes in, often the share price drops to at least
a lot,
that.
yes, yeah.
So it's whether you can handle that sort of volatility when it comes as well. Sometimes people take their money and go because they just don't understand it and they don't want to be involved in it. But it could be one of those things that you take some money off the table just in case, or it's really up to the
Personal
individual.
choice.
And a risk. It's a risk decision.
Yeah, good points.
Yep. Look, are you a trader or an investor? That's my question to you. If I was a trader, I wouldn't be taking it because it's going to affect your position size, and obviously you would have had that all figured out, obviously throughout your trades and your portfolio. If you're an investor and you believe in the company long term, you may want to undertake that offering, because it'll get you more shares, especially if they're trading at a discount and you think that the share price is going to go up again. So really, that's a question you got to answer. How long do you want to be holding this for? What are your levels? Where do you think that this can go?
Yeah, great points by both. All right, Harry is next and writes, I am 19 years old and am saving up to do your course. Good stuff, mate. And RNU looks like it might be forming a base after completing its downtrend, might be ready to move up soon. I know it's very volatile and a reasonably illiquid stock, but I would love to get your thoughts on the next few months for this stock. All right, what are we thinking?
19 years old.
Beautiful, yeah.
Wonderful, fantastic. Congratulations. And
when I started,
to your parents, if they encourage you to do it, more parents should be encouraging their kids to do this and invest in their kids early so that they're not just dependent on a job down the track. Really super important given where we are in this whole boom-bust cycle that we're in. So, but as far as the stock pick's concerned, another big tick.
Good.
It looks amazing. This would have to be, if this holds up and it doesn't take out, let's just have a zoom in there and have a closer look, but if it holds above that low there and keeps moving up, this looks sensational.
Yeah.
In terms of what this could do going forward. So I think already, mate, it's Harry, isn't it?
Yes.
He's got an eye for the sort of stocks to look for.
Well, he said he's been learning from watching us on the show. Okay. I didn't put that bit in, but he's been...
You've taken him under your wing.
No, but he's been taking a keen interest in things, which is cool.
Yeah, well, he's going to see so much about why we like this particular stock. So whether he's picked it from the fundamentals or just looking at it as something that's bottomed out and is coming off that bottom, but, there's a whole lot of analysis there that could tell a full story for you, which I know you're going to enjoy.
Yeah, look, I'm just going to quickly go back to IGO here and just contrast this and show you what the potential is. So look at IGO, look at RNU, and look at the similarities there, and I'll just put that there for you. So this is what you can do. You can look at different stocks, how they have performed, and this is one, it's in the resource sector as well. So, that just shows you a bit of a picture of where it could be going. And I wouldn't, put it past this actually heading around that 17 cent level there, even up to that 18 cent level.
Great. All right. Time to move on. Now, it is time for our hot stock tip this week, coming from Pedro.
All right, so the hot stock tip for this week is Fletcher Building Limited. Now, before we get onto the chart, check out the latest news that came out today. Fletcher Building has announced it will sell its construction arm to French infrastructure giant Vinci for around NZ $316 million. The sale includes Fletcher Buildings and maintenance businesses across New Zealand and the South Pacific, and comes after a tough period for the company. With weaker construction demand weighing on earnings, the deal is part of Fletcher's strategy to simplify its operations, strengthen the balance sheet, and refocus on its core building materials business. Final proceedings could rise to around $334 million, subject to regulatory approvals and the outcome of contract negotiations.
Pretty. It's always interesting. CSL got rid of its most profitable arm of the business.
Yeah, right.
But companies are, it is a play right now, especially in this period of the cycle. We saw around earnings season last year, most companies that got love were the ones that were able to slim down with technology and the use of AI as a cost-cutting procedure. Fletcher's getting rid of the arm of the business that there were lawsuits with that arm of the business. It was giving it real headaches. Maybe it's chopped off the right dead wood.
Yeah, and it was actually a lawsuit from the NZ government. They had a contract with them, and they didn't finish, according to the New Zealand government. They didn't finish that contract, so there was some, back and forth there, and hence why the share price was actually trading sideways for so long. And you can see that, that battle between the buyers and the sellers that was going on here, and finally it has broken out of that range, which is nice to see. So I'll just highlight that range there, which is that, the top half was around that $3.20. Now I'll just make sure to leave that on there so you can see $3.20, and the bottom of that range was around that $2.50, just roughly. And now it has broken out of it. And like we saw before with one of the previous stocks, that when it breaks out of it, it can come back to retest it, and that's a healthy pullback. If we see support finding here at $3.20, this one could shoot off. And I think that I had a look at the fundamentals a while back, and they were looking great as well. This is a good, healthy company. It was just going through a bit of a rough time, and this is where Warren Buffett talks about buying healthy companies that are maybe going through something, when they're a bit distressed. So I think that this could actually head back up to these previous levels, possibly around that $5 if it starts to take off, but it's looking quite nice. And let's go to the monthly here to see the bigger picture, because you can see that it's trading at levels that it hasn't traded since 2002. And it hasn't been shy to trade up around that $8 level in the past as well. So, and that's, back in 2006 when $8 isn't the same as $8 now. It's actually a lot more when you factor in inflation, right? So, right now, if you take that into consideration, it's gravely at a discount and undervalued, I would say.
Good. All right, there you go. Keep that on your watch list. Now, if you want more from us, check out our video, Trump Attacks Iran. Buy these ASX stocks ASAP.